Greetings, guys. Just an analysis of US30. So we have this candlestick over here on the monthly chart, which is a bearish candlestick with a long lower wick. By now you know that that means we have a lot of liquidity sitting at that level, and that in the future we will see price get to that point to grab that liquidity. However, this particular retracement may take months or even years to form. So at this point in time, this is not really important as price is still very much far from this area that I'm referring to. Nonetheless, we also had a W structure in this region with the neckline being there. And as you guys know by now, that I usually say that when it comes to W formations, ideally would love to see price breaking the neckline, then coming back to retest it, and then pushing further up. So that's what is currently happening here, where we have a W formation with the neckline being broken, and we saw price coming back to the neckline to retest it. So from here we might see price actually moving further up, right? So excuse me, before we continue, I'm just going to add a neckline to that region because it's a very important area, as it's the neckline of that huge monthly W structure. So here we go. So just bear in mind, guys, that when it comes to necklines, they are not actual lines like this line over here where I have the crosshairs. It's more of a zone, it's more of an area, right? So let's continue. So from here, what I'm gonna do now is add the Fibonacci retracement tool just to see if the neckline of this huge W structure aligns with any of the key areas that we have on the excuse me, Fibonacci retracement tool. Let's see. Just bear with me, guys. Yeah, so we can see that the neckline more or less or rather almost aligns with the 61.8% zone. As I said, guys, when it comes to necklines are not an actual line, they are rather an area. So actually the neckline is, I would say, in line with the 61.8% rather Fibonacci zone. So as we speak, a lot of people have already bought. Many institutions have bought already. Some are just waiting for price to move slightly further down, and that's when they will start buying. Others are waiting for further confirmations. Nonetheless, this is a very good sign, and this tells us that soon we might see price actually um, moving up again to this area over here, which is the previous high, right? So let's continue, guys. um let's see. So is there anything else of value or interesting that we see on this particular chart? Another thing that I see, which I've spoken about in previous videos, is the fact that we have a head and shoulders pattern over here, and I said that the neckline is more or less here. However, this pattern will be better visible on the lower time frames. But for now, what I'm gonna do is head down to the weekly chart. Let's see. So here we are on the weekly chart. So what do we see on the weekly chart? So remember, guys, that on the daily chart, or rather on the monthly chart, I spoke about this huge W structure over there, as well as the neckline we have here. Another thing that's also very important is the fact that we have this candlestick over here, the small candlestick over there. It is a bearish candlestick with a small body and a long lower wick. So we know that at that level we have liquidity there, and that tells us that the market must indeed come down to retest that area as well as to grab that liquidity. So what I'm going to do now is actually add a line to that area so that we don't forget about it. Just bear with me, guys. Let's see. There we go. There we go. That's our area of liquidity. Let's see. Yeah, there we go. So let's continue. So what else do we see here? What else do we see on this weekly chart that is interesting or significant, or that we should be paying attention to? Yeah, so also in the previous videos, I spoke about the fact that we have, or rather we had, an information in this region with the neckline being there. And I said that price broke the neckline, that went up again to try to retest it. However, it looks as though the neckline really wasn't really able to hold price, and price broke up and then came down, you know. Nonetheless, let's continue. What else do we see that is interesting? Let's see. Let's see. So on the weekly chart, excuse me, I don't really see anything else that is particularly interesting. So what I'm gonna do now is head down to the daily chart. Let's see. So yeah, so here we are on the daily chart. So the first thing that I'm going to do on this particular chart is just add my trend lines. Just bear with me. There we go. Yeah, there we go. There goes my trend line. There goes my trend line. So that's our daily chart. Another thing that we can see that is very important is the fact that we have a gap there, and gaps represent areas of liquidity. So there's a lot of money sitting there, and at one point or another, the market needs to get to that level to trigger that liquidity. Another thing that is also very important is the fact that we have this candlestick over here with a small body and a long wick. It is also a liquidity candlestick, and it tells us that in the future, price has to come down to that level to grab that liquidity, right? So what I'm going to do is also add another marker so that we don't forget about that particular candlestick. Just bear with me. There we go, right? This chart is very much similar to the Nasdaq chart in that on Nasdaq, there's also, just bear with me, guys. On Nasdaq, there's a gap at this region, more or less. There's also this W structure over here, and I spoke about how whenever we have W formations, a lot of people enter here, enter buys there, and then they buy again once the neckline of this W structure has been violated in this region, and put in their stop losses just below the W structure. And I also spoke about how this entire move is a stop hunt because we have this W with a whole lot of stop losses just stuck below that W structure. So this whole movement is a stop hunt in my humble opinion, and I think we're likely to see price actually start to go up. However, we just need to ensure that, or rather, I think the market will just ensure that it grabs as much liquidity as possible in this region because we have um, a liquidity candlestick here, and we have another one at the bottom. I think once these two candles have been filled, this will also mean that the neckline of that huge W structure has also been tested around this region. Then we will likely see price push up to the previous high, right? So let's continue, guys. That's just my humble opinion. So what else do we see on this chart that is interesting or significant? We also have an information here with a neckline there, and that we expect price to at some point retest that neckline and possibly push further down, right? So what I'm going to do now is actually just add a neckline to that W structure. Just bear with me, or rather the M structure. Apologies. So there goes our M structure. I'm not going to utilize the Fibonacci retracement tool just to see if this line is in line with any of the key areas, because just by looking at it, I can tell that it's not in line with the 51.8% zone, or rather the 50% zone, as well as the 61.8% zones. So let's proceed. Is there anything else of value that we see on this particular chart? Let's see. I don't see anything else. So what I'm going to do now is head down to the H4 chart. On the H4 chart, I'm just going to fix my lines. Just bear with me. There we go. There we go. The next thing that I'm going to do is add my H4 channel. Let's see, how would I add my H4 channel at this point in time? Let's see. I would add it this way. Actually, I would add it this way. I would add it this way. It's a very steep channel. I am not a fan of steep channels, but I feel that at this point in time I should be adding it this way. Let's see, just bear with me, guys. We just need to make sure that our channels and all drawings, in fact, are as accurate as can be. There we go. That should be fine. That should be fine. So what else do we see? Another thing that's also very important is the fact that we actually have we have, let me actually make this slightly bigger. There we go. We actually have an M formation in this region with the neckline there. Price broke the neckline, that went up to retest the neckline. I think we actually should have been looking for possible selling opportunities on Friday around the zone, and that's if at that point the timing allowed, because you can't just make, in my humble opinion, trades at any time of the day. There are specific times of the day when you should be looking to buy or sell, right? For example, for me, it would not make any sense to be looking for sells at 10 o'clock at 10 o'clock in the evening GMT plus 2, which is my time zone. At that point, I did not make any trades whatsoever. Nonetheless, as I say, we should have looked for possible selling opportunities, provided that the time also allowed, right? Today, price went back to the neckline of this formation right here, and I think we would have also looked for further selling opportunities, and that is because this zone is probably in line with the high of Friday. It's probably in line with the high of Friday. However, the only reason why I would say that we should not be looking for any selling opportunities at this point is because today is actually a holiday in the US of A, right? And we know that usually when we have holidays in the USA, indices usually move in a range, or they move in an upward sloping range, and that is because the market maker is trying to collect some orders. And what's likely to happen tomorrow is that we will see some rough movements just to stop hunt everyone, and then the market will move in its intended direction. So, in my opinion, what may possibly happen tomorrow is that because we have an information here with a neckline there, which is currently being retested, the market maker may go up again slightly, have an information, then push down to the zone, excuse me, where we have this area here, which is a liquidity area. Also, another reason why I say the market will likely come here is because we actually have a W formation in the structure, and I told you guys that whenever it comes to W formations, what normally happens is that a lot of people buy here on the second leg of the W and buy again on the break of that neckline, and they put their stop losses below. So let me just redraw that. So here's the W structure, and some of you may say that it's actually an inverted head and shoulders pattern, but nonetheless it's still the same pattern in my humble opinion. So that's the W structure. A lot of people actually bought here at this region, and they bought once again at this region, and they also put into consideration the fact that this trend line has been broken. So I can tell you for sure that there are a lot of stop losses in this region. There are a lot of stop losses in this region, and the market would likely come to this point, grab all of that money, and also test the neckline of that huge W structure I spoke about, as well as that liquidity candlestick. Maybe grab that liquidity, and then we might see price pushing to at least this level where we have this information that I spoke about on the daily chart, right? I hope that makes sense, guys. I hope it makes sense. If it doesn't make sense, just rewatch my video. Just rewatch it over and over. I think it'll make sense. Just also keep in mind that we have this area over here, which is a gap, which represents liquidity. We also have these candlesticks over here, which are also liquidity candlesticks. So there is scope for price to actually go further up, because there's whole lot of money in this region. So yeah, guys, that is it in as far as my analysis goes for US30. I'm just gonna stop here. If you have any further questions, just let me know. If you have any comments, just post them and I will get to them. Thank you guys for watching, and peace out.